Hi, this is Adrienne Oliver with Remax Universal, coming to you today to talk about what it means to be pre-qualified or pre-approved. So, getting pre-qualified or pre-approved for a mortgage loan gives you information about what you can afford. So my purpose today is to explain what those terms mean. They're tossed around very simultaneously within the industry, but they actually mean two different things. This is one of the first steps that you have as a buyer to being a homeowner, right? So a lot of times when people call me, I will ask them, if they've spoken with a mortgage loan officer or their bank. A lot of times they're just like, I just want to look. Well, here's why we just can't look. So sometimes what you can afford, if you look at something that you can't afford, everything else is going to seem, not as good, right? It's like expecting a steak and getting a hamburger. Hamburgers are awesome, but when you're expecting a steak, it doesn't quite work for you, right? So same kind of analogy there. So number one, pre-qualification. Pre-qualification means that a lender has done the initial calculation of how much money you can be eligible to borrow. You provide your lender approximate income, the amount of debt that you're carrying, and other important details from your credit history. This information is subject to verification by the lender when you actually submit your loan application. There is no guarantee of mortgage loan as your financial situation has not been verified. But with the lender, you may provide a pre-qualification letter. So they'll issue you a pre-qualification letter, which has more details about the likelihood of you of actually obtaining a loan. So that's what a pre-qualification is. Pre-approval. Pre-approval means that your financial institution has been verified by the lender. You'll find out a mortgage loan application and you've filled all this out and you provided all of the supporting documentation. The lender is going to analyze your financial situation, your credit report, your employment history, and your income, and decide what interest rate to offer and the maximum amount that you would be permitted to borrow. Though a pre-approval provides more certainty than a pre-qualification, it also does not guarantee the mortgage loan. It involves other conditions such as the assessment of the property that you want to purchase. So the property, once you've entered into contract, also becomes part of this loan. If it doesn't appraise, for example, that would be one reason that you would be denied the loan unless you can come up with the additional funds. Make sure that you know how much you can expect to borrow. Talk to your lender or a professional like me or a loan officer. I have lots of them on my team to analyze your financial situation. This is the first and most essential step to home purchasing. It's probably the most scary part for most buyers, but like I like to tell them, you go to a car dealership to buy a car, they shotgun your credit. They rent it to 11 institutions. This is a home. This is why you have credit. You have credit so that you can purchase a home. It's most likely going to be the largest purchase of your lifetime. So we have credit for this reason. By all means, we talk about what you think your credit score is. And if we don't think your credit score is going to get it, we don't run credit. We actually go through a credit repair process. So, if you have questions about pre-qualifications, pre-approvals, anything of that nature, please give me a call. My cell phone is 832-217-7141. Thank you and make it a great day.